a founder should prove that the product that he has built is successful. He should at least have certain number of paying customers. If not paying, at least some customers who have adopted their product even on a freemium model. That is when investors will start taking interest.
Hi everyone, I welcome you all for this another episode of Founder Spotlight series from Tracxn, where we invite startup co-founders to share their journey, insights, and advice for the youngsters. Well, today with me is Mr. Deepak Kumar, who is the founder of SlydS. Hi Deepak, how are you doing today?
I am great. How are you?
Doing great as well. Thanks for asking. Well, I welcome you on behalf of the entire Tracxn family, and thank you so much for making some time out of your busy schedule. My name is Supayan Das Gupta, and I'm heading the entire startup vertical over here. So let's get started with the interaction now. To start with, I would love to understand your background and some sort of backstory around SlydS.
So SlydS is my first startup and first successful startup, I would say.
All right.
I had started another company right in my final year of college. That was in 2011, which was into second-hand books selling online. So at that point of time, Flipkart and Infibeam, they were making a lot of news, and raising investments. They were synonymous with the Indian startup ecosystem. So I thought, let me do something in e-commerce space. So that's how I started that company. But I was not very successful in that. I could run only for about a year, and I had to shut it down because I could not raise investments. And during that period, my partner Pankaj, he was very good in making presentations for during his college days for his
All right.
seminars and academics. A lot of people used to take help from him to get their presentations made. So he reached out to me, with this idea that why not we make this a business and start making presentations for business leaders. And that is when I was already into the startup ecosystem. I had known what is happening, what founders struggle with. And during this time, I had joined a media company where I was interviewing a lot of startup founders and investors for their funding rounds, during their funding rounds.
Very interesting.
So I was aware about the problems these founders face when they reach out to investors and try to present their business plan. So when Pankaj came to me with this, with this idea, I thought I realized it was on point. I knew that there is a good market for this kind of service in Bangalore, at least. I had moved from Mumbai to Bangalore to run my previous startup. So I called him. I told him, come up to Bangalore. Let's do this, and that's how SlydS started. It's been 11 years now. The service that we provide in SlydS is helping founders who are during their fundraising journey, anything and everything that they would need. Maybe a pitch deck, a valuation, or a detailed financial model. If they are not ready for fundraising yet, how can we bring them to that stage so that they are funding ready, so that start getting interest from investors? So that is what these are the services that we provide. We are basically a fundraising advisory. That is what we do, including crafting their story better, so investors start taking interest in their story. If business lacks some kind of in the operational model or the revenue model, there is something that has to be fixed before we start reaching out to investors. That is what we advise these companies, these founders. Say if they are already in the market but they don't know what to value their company at, what is the right value that they should ask investors money. So that is what we do. So everything around fundraising is what we do.
Got it. Quite interesting, Deepak. Because I can see that you people have started way back in 2013. It's been more than a decade, right?
Yeah.
And during those times, I'm sure this concept of yours would have been very much fresh and would have helped so many startups to create their business and all, right?
Yeah.
Talking from the context of your own customer base, what's in store for them for another 6 to 12 months down the line? Anything which is exciting going to come in these few months for SlydS? We would love to hear from your side.
It's a very, we can see a very good future of SlydS in the next 6 to 12 months. First, because we have increased our portfolio of services now. Now we are not just advising the companies, for their fundraising, but we are also taking a step further and reaching out to investors on their behalf. So a lot of early stage startups who are, who have great products, who have great business model, but they don't know the way to the investors. For later stage companies, for companies who have already established themselves, they have, a lot of IB firms in the market who can take over their mandate and then basically run the show, which early stage founders they don't have access to. So that is what we have started doing for some of these high potential startups, early stage companies, early stage startups, where we are advising them for all the things that I mentioned before. Plus, we are saying that the network that we have built in the last 1 decade, more than a decade, we will tap into that network and take you to the right set of investors, and do the negotiation with the investors, find them the right valuation. If post investment services, if after getting the money in their bank account, how to use that money. So basically, right from the time a founder starts thinking about doing a fundraise until he gets the money and beyond. So we will be associated with these companies for their whole journey
Got it.
until they keep thinking about raising investments. So that is
Understood.
one. Another point I see is that a lot of people, AI has taken over the whole
Absolutely.
world, and we see what we have seen in the last few months, almost a year, that a lot of startups come to us with their AI generated business plan or
Right.
pitch decks or financial model. A lot of these tools can do that, but since raising investments is requires a lot of human touch, it's about money.
Okay,
so
that's
so
very
you need to, yeah. So that is something which is missing. So we in our company we use a lot of AI tools, but we make sure that that human touch that is required in narrating story to an investor or anybody who is putting in money in that company, that is not lost. So we make sure that their story has that human touch, has those highs and lows that that tinkers with the emotions of these investors. So that is what we maintain. Yeah. So it's more, we are well positioned now to help these companies stand out from who are just using AI to get their documents made.
understood. Quite interesting, Deepak. So, since we were talking about fundraising, what is your take on the entire life cycle of fundraising, right? The why, when, and where to start for any early stage startup co-founders. Your views on that.
So when is the the when part is the most challenging one. A lot of founders, they don't know when to start reaching out to investors, go into the market. So I would suggest that a founder should prove that the product that he has built is successful. He should at least have certain number of paying customers, if not paying, at least some customers who have adopted their product even on a freemium model. That is when investors will start taking interest. A lot of people come to me saying that I have built a very amazing AI based product which can we can transform this particular industry, but they have not proved that model right. And since in today's world there's a lot of competition, what you have built certainly somebody would have already built in some part of the world. Until you are very great at executing that particular model, you won't stand out, and it will be very difficult for you to gain interest of these investors. So at today's time of this competition, a lot of competition, and AI being around everywhere, where you just think about an idea and develop a business plan around it the next day. So a lot of people are doing that. So only execution is where the difference will lie. So how efficiently you have executed that model, how you have proved that you can gain customers money with that model, that is when that is where the difference will lie. So
Right.
wait until that time and then get into the market.
Got it. Got it. So taking the same conversation forward, if you have to pick top three things in terms of market research before somebody opts for fundraising, what would be those top three things to be done by a co-founder as a part of his research analysis before he even thinks that this is the right time for me to go ahead and approach investors? What would be those?
First, obviously, is the market. How big is the market? So this a lot of people talk about total addressable market. You should have $1 billion market to operate in. This is not just not only for showing the investor that we have a huge potential customer base. Not only for that, but also for those times when, say, if your business doesn't fail, you are not able to achieve what you had planned to achieve. So the investors will have some confidence that at least the market is big. So even if your execution was not to the point, we can maybe do a pivot and still operate in that market, or we can find a potential buyer in the market who can just acquire your company and then plug in into their existing product or services and still make some exit out of it. So that is why investors like to hear about companies who are operating in a bigger market than anything smaller. So that is one, market size. Then you should also do a good research about your competition. How many players are already operating in it? It you will not gain interest of investors if you are if you are starting something which has never been done. Obviously, if it's a very transformational thing which you are doing, then there will be people who will take interest. But generally, investors like to talk to companies who they see that somebody else has already done similar thing, if not the same. So just see, a decent number of companies should be there in that operating market, and then you operate in that, and then show that how you are different than those other people.
Got it. Got it. Thanks, Deepak. So, also would love to understand from your side, how did you utilize the platform of Tracxn for your own market research? If you can throw some light over that.
Yeah, so as I said, that we help startups with their fundraising and also investors. So we also work with VC firms and angel investor groups in identifying good startups, for their portfolio. So we use Tracxn very extensively. If we are working with a particular startup, helping them raise funds, then as I mentioned, that we use Tracxn platform to determine the size of the market. Tracxn publishes a lot of industry sector reports, so that gives us an understanding about the industry and obviously the competition. How many other companies are already doing it? We get a lot of good news articles of those competition companies if they are covered in the press, or if they have already raised investments, at what valuation they have raised investments. So we are able to benchmark that particular client of ours against these players. So that is how we use Tracxn.
Got it. Got it. Wonderful. Talking about my last segment for today, what advice you would love to give to a 25-year-old startup co-founder who has just started their journey and looking for raise the entire company from scratch? Any sort of advice which you would love to give?
I would tell him that don't start a company to raise investment.
Got it.
You start a company to solve a problem. Make sure that problem is big enough, and the investments will start flowing. You don't have to look out for investment if you have the right product and right problem to solve.
Right. So right product market is the answer, right?
Yes.
Product fit. That's very important. Great, Deepak. I wish I could have continued this conversation for a bit more longer, but due to your busy schedule, we will have to cut short. But thank you so much. The kind of topic that we have spoken was very insightful from your side, right? And we wish to connect you very, very soon. Yeah. Thank you so much for your time today.
Thank you, Sabayan.